Welcome back. You're watching Editors Roundtable, and we're putting the spotlight now on the technology names. The question that we're asking is, can IT emerge as the dark horse? Is there a possibility that IT can positively surprise in the second half of this fiscal year or next year? So to put it in context first, Q4 was a howler. Expectations for the first half of the year, that's Q1 and Q2, have been completely erased. Everyone's expecting a muted quarter. But companies held out hope that in the second half of the year, things will recover. But there were many bears on the street who believed that the second half of the year recovery is not going to take place. But here we're putting out some data which may belie that expectation. The US economy is still firing. Look at all the data points that have come through, whether it's the labor market data, the fact that consumer confidence is at the highest level since January of last year, the Q1 GDP print coming in 2%, getting revised higher compared to their earlier estimate, the fact that all 23 big US banks passed the stress test. So if the US economy is indeed quite strong and resilient, and expectations of a recession have been pushed forward now to next year, then can the US sentiment turn? And if that turns, will they start spending? If you remember what Rajesh Gopinathan, the outgoing CEO of TCS, had to tell us in April, he said, and I quote, US reacts fast on the downside as well as on the upside. If the current uncertainty goes away, we can expect a significant pop at year end. Bear in mind that the first half, Q1, is going to be very muted because all channel checks seem to suggest that, at least as of now, client decision making has not picked up. The projects which were put on hold continue to be put on hold. They've not restarted as of now. So Q1 is going to be weak. The question that we're asking is about H2, the possibility that FY25 turns out to be a very strong year. IT stocks consequently have also rebounded a fair bit. So the low that all the IT stocks hit was when Infy came out with their numbers on 17th of April. And since then, across the board, there has been a rally of 17 to 17%. Valuations right now are not very expensive. The IT sector is trading at similar or slight discount valuations to their 5-year rolling average. And even the relative valuation, TCS, for instance, is now trading at a discount to Accenture, where up until now it was trading at a slight premium. So just let me put this, this is the data point that I wanted to throw up. Do you think